Hello, everyone, and welcome to another episode of the A&H Berts Stockpickers Podcast with Albert and Hubert.
Here, each week, you can join us in discussing our favorite stocks where we can help you find your next investment opportunity.
We aim to present and discuss the investment thesis for our top picks.
Let's get right into this week's choice. Today, I'll be taking the hot seat with my pick this week, JD Wetherspoons. This company is a low-cost chain of pubs. They currently have 925 locations nationwide and a market capitalization of 1.23 billion. My first reason for this investment is due to the recovery that I anticipate will happen from COVID. So they recently suffered a significant fall in revenue. In 2021, only 0.77 billion, down from 1.26 billion in 2020, where the pre-COVID revenue was around 1.82 billion in 2019. This financial year, they have made a significant loss of 195 million, and the year before that of 105 million. Now, although they did make a loss the last 2 years, it's worth remembering that every year since the company went public in 1984, they were able to make a profit except the last 2 years. So, for example, the financial year ending July 2019 recorded a pre-tax profit of 95.4 million, and the year ending July 2018 saw 89 million of pre-tax profit. Now, the loss making in the last 2 years is not at all surprising, given how badly pubs and the hospitality sector more generally was affected by the closures. They're among the worst affected industries out there. So I don't think that it's worth getting too worried about the losses in the last 2 years. These were, of course, exceptional circumstances for that industry. And I don't think it's fair to compare the last 2 years' performance with any years before that. Now, we were starting to see significant recovery. In the 4 weeks preceding the 1st of October, we saw a like-for-like sales that was only 4.9% below the 2019 levels. So we should see a significant recovery in revenue and therefore in companies' profits as we come out of COVID and COVID restrictions.
Yeah, just to sort of tap in there. I mean, the last time I went to a Spoons after sports training, the classic, it was packed. The Spoons was full to the brim of people, and I said, like we were talking about this earlier. You said there's the very same thing up in Durham. It seems to be that customers are quite willing to get back into it and go back to their Spoons now that COVID is somewhat settling down.
Yeah, absolutely. I think that people are starting to in pre-pandemic numbers are starting to go out again, and I think that this bodes very well for Wetherspoons and for the hospitality industry more widely. I think that for this is very much dependent on what will happen this winter, though. The government has started to talk about a plan B in case the COVID cases get overwhelmingly high. This doesn't involve a closure in pubs. However, it may involve a mandatory vaccine certification in certain settings and also legally mandating face coverings. And these measures, whilst not closing pubs, may well end up reducing footfall to their pubs, even if they're allowed to remain open. And also, even if this plan B isn't implemented, there's probably a lot of people, particularly older people and people in more vulnerable groups, that would be less willing to go out if COVID hospitalizations and deaths continue to go up over winter, which means that they will see a reduction in footfall. So I think with the future revenue, the winter could be choppy, or it may be very good for the pub. So it's very hard to predict, what measures will be introduced and what hospitalizations and deaths continue to look like with the vaccine having been rolled out.
Yeah, just to touch on that, in terms of we're looking at the shorter term view here in terms of recovery, I guess another big issue in the UK right now is the supply chain issues we're facing right now in terms of products reaching stores and potentially even reaching pubs. As far as I'm aware, I don't believe the pub sector has been hit too badly by these supply chain issues, namely given by the fact that a lot of beers and products produced actually are UK based, but they do have some international beers there, of course. But in terms of that sort of short-term view of recovery, alongside that risk of plan B, how far do you see the risk of supply chain issues actually being a problem for Spoons, or do you potentially see it as an advantage for Spoons, as it may have a competitive advantage in dealing with it over competitors?
Yeah, I think that well, with supply chain issues, you have to consider that a huge number of industries are affected. It's not just pubs or hospitality. Everywhere across the board, or most sectors are being affected by it. With Wetherspoons specifically, what has happened recently? Tim Martin, the CEO, has quite publicly sort of stopped stocking certain EU produced brands, and instead moved to other countries. So, for example, there's a large number of products are imported from Australia now instead of the EU. So what we have seen is a kind of shift away from a lot of the EU production. So in terms of supply problems caused by Brexit, I think that Wetherspoons has made themselves less vulnerable to those. Not completely invulnerable, but less so. So I think that and yeah, as a very large chain, they are definitely better able to weather this problem.
Yeah, I think you make some very fair points there. I think we could see it sort of handling recovery or even supply chain issues far better than everybody else. But I mean, in terms of currently where the share price is at, I think a good sort of segue is going onto I believe will be your next point, which is looking at valuations, seeing as we've seen a real potential buying opportunity, don't you think?
Yeah, absolutely. So I'll get right into my next point then. So the share price of Wetherspoons has declined significantly recently. In May, it reached its peak this year of 1,709.2, and it's fallen as of market close on Friday to 954.7, which is well below its 5-year trading average. Now, the current valuation represents an EV to revenue of 2.82. This is a higher valuation than in previous years. If you look at how it reflects the current output, but if performance starts to return to previous levels, which it looks like it's starting to do, then this will definitely indicate a cheap forward valuation, since the current earnings problem is probably temporary. So I think that the current price would reflect a very, very bad winter for the company, which I think is overly pessimistic, what's currently being priced in. And I think that we are seeing significant recovery for hospitality more generally, and Wetherspoons will likely benefit from that. And so I think that the current market price is a bargain, given what we should be looking for in the future.
Yeah, I mean, if we see sort of revenues and then profits reach or even come close to pre-COVID levels, with the current price and valuation we're seeing now, that could very well correct with a nice re-rating in the future. Because I mean, you probably agree. I highly doubt that if earnings even double, then we're looking at, I mean, sort of revenue doubles. Sorry, we'll be looking at a valuation which was the same as previous years. And if it exceeds double, then we're looking at an even cheaper valuation than we have seen for quite some time. So, with that in mind, then I think you're right. A potential valuation, a potential revaluation and re-rating is very likely to occur for this business. Now's a great buying point. It looks pretty affordable.
Yeah, I think so, and I think that that if, as you were saying, if revenues do start to pick up, it does make the current price look very, very cheap. And so I think as long as there's not another if there's another very heavy restrictions over winter, that might make it justified, the current price, but it doesn't look like we're heading that way right now. Another thing to say about the valuation of the company is its very impressive property portfolio. So 2/3 of its pubs are freeholds or long-term leases. Now, I saw that these properties are valued at 1.1 billion. However, this valuation was from 1999. And so the true value of these properties is likely substantially higher, given that there have been increases in property prices in pretty much all parts of the UK in the last 20 years. So this benefits them in a couple of ways. Firstly, with the current property price increases, Wetherspoons is not stuck having to pay out rent to landlords since they own the properties outright. And as rent increases, as property prices go up, this could put other chains which don't own their properties outright in trouble. And of course, they're benefiting because it's making their properties more valuable. So I think that its property portfolio is a very, very, very attractive part of this investment.
Yeah, no, I think that's a very interesting point. It does make it less susceptible to shocks as well. We have to bear that in mind.
So I think I'm going to go into my third point now, which is the low cost base of the pub. So one of the main attractions of Wetherspoons as a place to go is that it has exceptionally low prices for alcohol and food. And one reason is that all of its pubs have freehouse status, which means that they can negotiate with any brewery to try and get the best prices. They also keep costs down, for example, through having very strict pouring rules. Staff have to be extremely careful that they don't spill, and anything that they do spill has to be weighed in order to keep track of the losses. It also has a very fast product turnaround, with the speed bar being made to have the most ordered drinks at the ready. And so I think that this ensures that they can keep costs low, and going forward, this is a strong business model which makes it more resilient than many other pub chains.
Yeah, I mean, for something like this, especially when you're getting to a pub, like there's two reasons I think a consumer will go to the pub. Number one is probably, not great for spoons, which is going for a nice family Sunday lunch and actually, getting a nice drink. But you don't do that very often. What Spoon shines in is the second reason people go to the pub, which is just to pop round after work potentially, or after a lot of uni students go around because it's affordable, it's quick, and it's easy. You're going to get way more in a Spoons. You can go there, you can order on the app, which makes it really convenient, really cheap, very easy, and they're everywhere. A Spoons is everywhere, so it is very well suited to just handle that sort of large turnover of customers and large turnover of drinks, which especially when they're charging, their margins aren't exceptionally high because they are keeping prices low, but because their turnaround and their number of sales is so great on like a usual year, this actually bodes really well for profits at the end.
Yeah, absolutely. I think, and it's a model which has shown that it is profitable. Barring the last 2 years, it's turned a profit every year. So, yeah, although on each drink they make very little, this model of focusing on volume and turnover does seem to have worked, and so going forward, it should continue to work.
What's quite interesting as well is their attention, their attention to detail. I'm not sure if this is something you've actually looked at, but apparently, if you look at sort of how Spoon staff are trained, the way in which they speak to customers is actually specifically scripted to make sure customers subconsciously almost buy more. So they won't say, would you like a single or a double? They'll always say, would you like a double or a single, which for some reason actually ends up with people buying more doubles than singles at the end of the day. So that's also something interesting to add, which I just don't think is done at other pubs. It's a very rigorous process with the employees, which, does have a very big impact, with the little small things adding up over the long term.
Yeah, absolutely. I mean, that is, I hadn't heard of that, but that is a very, very interesting example of how they are focusing on keeping their volumes high. And obviously, I don't see any reason why this model won't continue to work going forward as it has done. So, one risk, however, speaking of the Wetherspoons staff, are the labour shortages that are currently plaguing the UK, and particularly hitting many industries, and hospitality as well has been one of the areas where there's been a huge surge in demand, and they just haven't been able to find the workers to keep up with that demand. So for Wetherspoons, there have reportedly been many of their locations, especially the ones in sort of the big holiday spots in the UK, have been struggling to recruit their new staff. And obviously, if they can't recruit staff, their revenues are going to be constrained because obviously they don't have as many people serving, they can't sell as many drinks. So this could present a very significant challenge to the company. However, I think that that in fact Wetherspoons is actually better placed than many other businesses to weather this. So one system that they have is they compensate employees by giving stock to them, and they also pay out bonuses when the company is profitable, which is quite attractive and will, I think, give them an edge over other companies when it comes to attracting workers. Tim Martin recently said that the pub chain had received a significant number of applications, and said that the employee numbers had risen by 3,000 to a total of 42,000 between the end of their financial year on 25th of July and the 20th of September. So they are obviously being able to attract staff. So I don't think this will be a very significant problem for them. So I think that they can still recover in spite of the labour shortages.
I've got a quick point actually to sort of add into potential risks or almost criticisms, if you will. I mean, on this show, we've often looked at a lot of long-term investments. We like to look at, I mean, certainly looking at like Games Workshop, Anglo-American, sort of we're looking at a very long-term view on these. But here we've looked more on the short term in terms of the analysis we've given. But what do you think is the long-term growth prospect for a place like Spoons? Do you think it has much more scope for growth? And, what are your thoughts on that?
Yeah, so I think looking forward, the growth question is an interesting one. So obviously over the pandemic, I think they opened 5 new locations, and they closed more than that. So obviously they haven't been expanding a lot recently, but that's because of our exceptional circumstances. So I think one problem they may face going forward is, as I mentioned before, rising UK property prices and their model of buying locations. I think that obviously if these locations do become increasingly expensive, that could mean that expansion for the company becomes more and more expensive and potentially prohibitively expensive in certain locations, for example, especially in London and other urban centres. Another potential issue with expansion going forward, the plans that are being circulated by the government to cut alcohol duties. It seems counterintuitive, but actually Wetherspoons has benefited from high alcohol duties because smaller pubs and independent pubs have suffered the most. They're the least able to pay these higher taxes. However, Spoons as a chain have been able to keep their costs low. So not only does this help eliminate the competition, but what it also serves to do is when these smaller pubs get into financial difficulties, Wetherspoons can come and take over. But obviously, if the tax is cut and local pubs start to fare better, Wetherspoons may have a harder time finding locations to take over. So I think those two factors could potentially limit future growth. However, I think that already it's so large, it has nearly 1,000 locations, that there seems to be no issues with the current locations continuing to function as they have done. So, yeah.
I think on top of that as well, I think going on to the competitive advantage of other firms' points, despite rising property prices being a potential hindrance, in many respects, I think it could potentially actually act as an advantage in a competitive sense. Seeing as a lot of small places and other chains tend to they tend to keep things very classical. They will buy locations that used to be pubs, old restaurants, things that already have the infrastructure and the aesthetic design of a pub. Spoons seems to do things a little bit differently. Now, they do own a lot of locations which do just look like classic pubs, but they're also very good at turning literally anything into a pub. I mean, a few examples of that would be the Knights Templar in London, which is quite a famous Spoons that seems to be an old bank. There's a big one in Kent, which used to be an old opera theatre. So they're quite happy to literally buy up any old land, any old sort of industrial estate and turn it into a pub, which could be an advantage, especially if hospitality locations become increasingly more expensive. They can buy up things that other pubs just aren't willing to do.
Yeah, for sure. They have shown that they are very, very flexible when it comes to the locations that they choose. And I think also, of course, this, especially when they take over sort of quite interesting buildings, this does serve as a unique selling point for Wetherspoons. You know, there's not, you know, it can be nice to change it up a bit and drink in, yeah, like the Knights Templar location. So I think that, yeah, that as well as representing other opportunities for expansion beyond what the normal constraints for other pub chains, it also serves to help them stand out as locations.
Yeah, wonderful.
Great. And just one extra thing to talk about. As I mentioned before, I believe the stock has priced in right now quite a bad winter for Wetherspoons. However, I think one thing to keep in mind is that during this pandemic, the pub sector, including Wetherspoons, has received a significant amount of government support. And I think that even if the worst does come to pass and this winter results in a significant decline in sales, this chain can expect to get significant government support. I think it's highly likely that, as they've done before, the government will provide aid to the pub sector. So I think that even if we are looking at a bad winter, as I think the stock is priced in, this will help to mitigate that.
Wonderful, wonderful. I mean, unless you have anything more to add, I think for me that seems to sum up Spoons quite well.
Yeah, I think that's everything.
Awesome.
Well, we hope you enjoyed this week's discussion.
And yeah, let us know your thoughts on this week's pick in the comments or on our social media. And please do send us any question you'd like answered in the next episode.
If you have a suggestion of a stock we should cover, please let us know.
Wonderful. And see you next week for another episode of the A&H Berts Stockpickers Podcast.